Hello guys and welcome to my YouTube channel once again. So in today's video we're going to be analyzing this pair V75 1S. It's one of the low volatile pairs that you can trade with a small account size. Alright, so we're going to do a top-down analysis. Right now we are okay. Today is the beginning of a new month, beginning of October 2025, and looking at the chart on the monthly time frame, you can see the market has been selling massively for a while now, for some years now. You can see we have this is let me get this to the market has been bearish. The market has been bearish for about 5 years now. Look at this since 2020 up to this the current year. The market's been bearish, it's not been bullish. That's on the monthly time frame. All right, so let's look at the weekly time frame. So on the weekly time frame, what we have right now is last week closed bullish, and that last week candlestick actually broke above. There was a resistance zone somewhere here. All right, you can, yeah, there was a resistance zone somewhere around here, as you can see. So the market last week's candlestick was able to break above this resistance zone and close above it. All right, this is a very clear indication of a possibility the market is going to buy. All right, so and looking at the downside, the support region, we can see we have a double bottom here. Okay, so with this double bottom, it adds to our our prediction that the market is actually going to buy. Our analysis, the market is going to buy. All right. Then this is actually a neckline. From what we can see, this is a neckline, and what the current week's candlestick is doing is actually a pullback. Looks like a pullback. The market wants to pull back to this neckline so it can take a buy from here. Okay, so that's all we can see about this particular this pair on this time frame. Okay, so let's go down to the daily time frame to still spot it. See if we can spot some nice opportunities there. All right, so on the daily time frame, we can see the market after selling for a long while. You can see the market has been creating lower highs and lower lows, lower highs and lower lows. Then this is the last lower high the market created. After it created this lower high, one moment guys, I want to get this to, after creating this lower high, it created a break of structure. It then pulled back to this level. Now, what happened there is this, that the market, after this break of structure happened, then the market created a lower low. There's a lower low here at this point. Let me see. I think there is no lower low again. Let's look at it after this break of structure at this point. Okay, so the market went up to this level, and it has never created a lower low again, only created a double bottom, equal lows here. All right, which is a reversal pattern. So this indicates that where we have this rejection, this is zone here acting as a neckline for the market to continue with the buys. That's what it shows, that this is actually a neckline at this point, considering the fact that this is the first bottom and this is the second bottom. So this is actually a neckline for the market to start buying from. And looking at what we have here, you can see we had some rejections. The market has been rejecting this level for some days now. This is the first rejection, second, this is the third one, and today's candlestick is selling towards the same region. It might reject on getting to the same zone again now, but there is one thing you have to consider also. We have a fair value gap down here. We have a fair value gap down here that the market never filled. All right, there's a fair value gap right here, the market never filled. And if you look at the fair value gap, trying to extend it to the left side, it's in line with a zone where the market had bought previously. There was a nice buy from this level previously. This is the buy, you can see that. So with this, it is very possible that the market may want to sell to where we have this fair value gap before it starts selling again massively. So there's a very high chance this is going to happen. All right, the market may want to sell to this level first before it starts buying massively, guys. So you take note of these things because it usually happens. They happen. All right, so but that notwithstanding, since we are looking at the current zone where the market is, just wait to see some confirmation. If the market gives a confirmation it's actually going to buy, then you can take a buy from there. All right, because like I used to advise, when you analyze the market you cannot be so sure that the market is going to respect your analysis. There are times the market may not respect, so for that reason sometimes, in fact most of the times, when you analyze the charts, try to have a plan B. The plan B will be, if the market fails here, then this is what I'm going to do. I'll wait for it here. I'll do this. So if the market fails at this zone, then I should be able to spot an entry at this zone. I should wait for the market to get down to this zone so I can take the massive entry. All right. And also, mind you, if the market continues by, and besides, we have a bullish structure here. You will be noticing a bullish structure, because if we bring a trend line and then we put it like this, then we'll be having all right, this is a high at this point, and then if you duplicate it, just put another one down here, although we do not have a nice low to place it, another lower high to place it, then if you bring the Fibonacci retracement to, although where we are expecting the market to, you see, okay, the fib 2 is now giving us the golden zone is around where we have this rally base rally setup. All right, so the market can possibly buy here too, but we cannot be so sure the market will buy here. All you have to do is to wait. If you see the confirmation on this zone, then you take it. But I like waiting for the market to get to where it had bought previously, because that is where the market will mostly respect. All right, so if the market gets here, I can take a buy from here with full confidence. I have much more confidence to take the buys at this zone than taking the buys around here or here. All right, so if you see the setup, if you see a good confirmation, you can take a buy here at this point, and there's a chance that it can still buy up to this level, then sells back to this zone, so it can buy massively. But that notwithstanding, wherever you are able to take the entry, mind you, this is daily time frame, you can still go down to a lower time frame to look for where you can possibly enter the trade. And if the market gets to the last zone, this one down here, and you're able to take an entry, the minimum lot size is 0.05. Yeah, 0.05. This is 0.1. So you make so much profit if you can hold the trade for a longer time. It depends on your account size anyway. 0.1 is not too big, but it depends on your account size. All right, so meanwhile, let's just go to the 4-hourly time frame to still confirm more possibilities. All right, so on the 4-hourly time frame, let's see what it gives us. Let's see what we have on the 4-hourly time frame. Okay, so on the 4-hourly time frame, if you look at what we have here, guys, let me show you something. This looks like an inverse head and shoulders pattern. Like, this is the left shoulder, this is the head, and the market is coming down to create the right shoulder. Okay, so this is another thing that can make you possibly feel, okay, the zone is actually going to buy. So in case the market gives you a nice structure, like it is going to buy from here, because it's a 4-hourly time frame, to consider this inverse head and shoulders pattern that you're seeing here as being valid, then you have to go down to a much lower time frame. If you can go down to, let's say, the 15 minutes time frame to see if the market is consolidating or indicating some rejection signs. If the market is rejecting on this 15 minutes time frame, then you can, okay, take a buy, but take the buys to take your profit in the next reasonable high. Like, if you take the entry somewhere here, you can take your profit around this level. You can take your profit around this level here, because there is no guarantee that this head and shoulders pattern, the market will really respect it. I don't know if you've come across situations on the chart where you spot a very nice reversal pattern, but the market doesn't respect it. All right, that is because of the direction of the market. So you might find a head and shoulders pattern in a bearish trend. The market refuses to respect it. All right, the market will refuse to respect it. So that is why, since we are expecting the market to naturally sell to a zone down here, so any setup here you can take a buy, but you have to take your profit where it is realistic. Set a realistic TP, you can take your profit here around this level, then you make your money. Meanwhile, if you try to zoom out to look at the chart, you will see that there's a very high chance the market will have to sell down, so it can create a higher low. You understand? The market has to sell down to create a higher low. That is why this inverted and shoulders pattern seem to be not too strong enough for me to take any trade. All right. But in case you just want to do a quick scalp, you can consider it. Then you have to go down to, let's say, the 1 hourly time frame. Let's see. All right, so on the 1 hourly time frame, what do we have? You see, we have a very strong zone here. Look at this zone, looks very strong because the market had bought previously from this zone. If you look at it, this is a zone the market has been buying and yeah, selling previously. It's then the market is retesting that zone. The market is retesting. See the buys from here before. The market bought from here, sold from here. Now finally the market bought and there's a change of character here considering this time frame, the market structure, this market structure right here. This looks like there's a change of character here. So this is actually a pullback to this zone. And you see the rejection that is happening here on this same zone too. All right. And you can see on the far on the right here, we have about 39 minutes for the current candlestick to close. So now for the market to, if the market closes bearish below this zone, then know that the buy opportunity has been invalidated. I mean, then if it doesn't close that way, you can still go down to the 15 minutes time frame to spot more entry possibilities so that you can just take the buy. All right, you can just take the buy, then you make it some good profit. Mind you, if you take the buy, like I said earlier, you take a buy, let's say from here, let's say you're able to get an entry from here and you take your profit around here, it is good. This is about $18 and your stop loss will not need to be too much. If you're taking an entry from that level, then your stop loss should just be below that, a little below that zone. Somewhere here is not bad. All right, it's not bad. Somewhere below that zone, which is about 2.43, you are risking to make $18. It's a very good risk to reward ratio, guys. All right, so you can just do this. I used to tell you guys, it's not until you catch the whole I don't know how to put it, because sometimes when you see a setup that tends to, gives you maybe you see a setup that has a chance of maybe making you $100 or risking $10 to make $500, you would want to hold the trade till it hits the $500. Well, it is good, but you have to be considerate. Just understand that the market is not reliable. All right, do not be so greedy. You make some reasonable profit, you step out of the market. Based on the weekly time frame and the daily time frame, the profit to target for this particular setup should be very high. But based on the fact that the market where we are buying it from is a zone where we do not seem to be so confident. Although the market as it is right now can buy from here till the zone at the top. So it can maybe wants to create a double top on the 4 hourly time frame before it sells. It can just do that. Like, let me show you guys what I mean. The market can just want to buy up to this level to create a double top. Then from there to start selling down to where we have this zone down here. All right, and that would be about $40 profit. But you don't need to hold the trade up to that level. Even if there's a possibility that can happen, but you don't need to be greedy. All right, just take your profit and step out of the market, make some good profit on a regular. All right, that's what you have to do for yourself. And in fact, looking at what we have here, I can see a trend here. Can see a little trend. This is a high and a higher high. And then if I duplicate this, we will still have high here, and let's say the market is rejecting where we have it there. So we can have something like this. Looking at it on the 15-minute time frame or the 1 hourly time frame, you see it's a nice movement. All right, you take your profit somewhere here and then you wait for the market to give you another opportunity. All right, so it's simple, guys. Just be practicing things like this. Try to analyze the market just like this. It will help you. It doesn't need to be complex. If you open the chart and you try to analyze, then you find it somehow difficult or confusing. Guys, forget about that particular pair. Go to a different pair. Look for another pair and try to analyze. Look for a pair that is easy for you to analyze so that it will be easy for you to find an entry. All right, anything that looks complex, anything that looks difficult, that wants to make you think too much before you kind of find an answer to it, just forget about it. You don't need to do guesswork. It's supposed to be when you analyze, when you want to analyze, it is supposed to be something that you just open the chart, then you see what you want. But when you do not see what you want, guys, do not stay too much on it. Else, you will start seeing, your mind will start seeing what your eyes cannot see, and at the end, you'll be taking some decisions that you either make you sad or or maybe probably make you happy, but most of the times it's going to make you sad because you make the wrong decisions. All right, so that is all for this video. Meanwhile, like this video, share your thoughts in the comment section, subscribe to this YouTube channel if not done that yet. Registration for the October mentorship is still ongoing, to be ending soon. Try and be a part of it so you can learn how to trade independently. All right, guys, so we'll see you in my next video. Stay blessed and peace out.